Hello, hello, and welcome to Wealth Wednesday and Real Secrets of Money. Today, we are focusing on understanding credit. My name is Lisa Lickert, and I am your trainer, and we are ready to get the party started. I want to make sure everybody understands that this is a conversation. We are here to help you learn and grow your financial knowledge. So at any time you have questions, we ask that you drop them in the chat. Let us know what those questions are. Andrea on our team, she is going to be watching the chat for us and making sure that we address those questions. I will share, for those who registered for today, you answered some questions coming in, didn't you? And we made sure that we covered all of those answers as we customize the presentation for today. So with that, we're going to go ahead and get started. All right, let's kick it off and just share what credit is. Most people do know, but it's always good to do a little bit of a baseline and just kind of get back on the same page. Credit is the ability to borrow or access goods or services with understanding that sorry, Andrea, I'm going to stop real quick because my team is actually coming into my office saying they cannot get on. Hello and welcome to Wealth Wednesday and Real Secrets of Money. Today we are talking about understanding credit. I am your trainer, Lisa Lickert, and welcome. I do want to share before we get started, however, that this is a conversation. This training is all about you. We use the survey results from your registration to customize the content of today's presentation. And as we talk throughout today, if you have any questions or wish to expand on a topic that we're sharing with you, we ask that you drop that in the chat. And Andrea on our team is going to be monitoring the chat, interrupting me, and making sure we address those questions. We'll also have time at the end to have open conversation. All right, so let's get started. What is credit? It's your ability to borrow. It's something where you're able to have the understanding or the credit now, the money now, in order of a commitment to pay later. And there's three types. There are revolving credit, there's an open credit, and then there's an installment credit. So let's do a deeper dive into each of these. So revolving, the common example is credit cards. So you have to pay a minimum balance each month, you have a credit limit, and the balance carries forward month over month, interest is applied. So the credit impact of a credit card is if you are paying on time, you have a credit impact, and if you're paying late, you have a credit impact. Now, open credit, this is something that's going to be a little bit more related to your utilities. And that's the most common example. You know, most families have utilities with their apartment or their home, and this is an example of that open credit. Most utility companies do not report when you pay on time. But what does happen is if you don't pay timely, you could go into a collection situation. And when you're in that collection situation, one of the steps that they do have is that threat to impact your credit. Installment credit. Now, these are going to be your car loans, your mortgages, your student loans. This is where you're paying interest as you go, and it cannot increase the amount of the loan the only way to increase the amount of that loan is when you refinance. Now, impact on your credit. This is going to impact your credit when you pay timely. This is also going to impact your credit when you do not. So what is a credit report versus a credit score? These are two totally different things. A lot of people think they're one and the same, so let's get to it. Before we jump in, however, we have our first polling question. How often do you check your credit report? Do you check it once a year, every few months, rarely, or never? Okay, we've got our poll up here. Take a few seconds. There we go. We've got some answers coming in. Very good, very good. Give it a couple seconds. We got a few more people answering. Great. All right. I think we have the majority of the answers, which we have people, the majority of the answers, it looks like we're falling out actually at half as once a year, about 30% every few months. And then just a few folks with us, they have not checked or rarely check their credit. So After today, it is our hope that you are frequently checking your credit, and you may even be doing it on a monthly basis, if not more frequent, depending on what you're trying to accomplish. All right, a credit report versus a credit score. So the report is your history. It's your whole financial life. It tells the story of your finances, and your credit score is that snapshot of your current financial life. What's happening in this short term? It's a numeric score, and that score is kind of like a grade that is used for creditors to assess what kind of risk you might be if they were to issue credit. Make sense? Awesome. There are 3 credit bureaus for your financial information, and you can request a free report at any time. You guys might see or notice in your credit card accounts, there is now a feature where you can check your credit score. Your bank account app typically has this as well, but you can also go into an annualcreditreport.com and access your credit report. Now, a lot of people think that if they access their credit report too often, that will have a negative impact. We'll talk a little bit about a soft pull and a hard pull later on and how that impacts your credit report, but you can access your credit report at any time without a negative impact on you. Okay, your credit score, that is the grade that you were given. And so it's a measurement of your success in managing your credit. That grade and score can be anywhere between 300 and 850 points, if you will, and it is linked to your Social Security number. So what are the major bureaus? You see them here: Experian, TransUnion, and Equifax. You probably, when you're on your apps, you kind of see that you'll have one featured. It's usually Equifax, but there's also the other 2 that's on those bank apps and your credit card apps. So what about the credit score models? Okay, there's 2 credit score models. And one is FICO. And that FICO actually stands for, drum roll here, I have it here, Fair Isaac Corporation. And then there's VantageScore. So these models are very complex equations and calculations to evaluate your worthiness as a credit risk. Now, the FICO, let me go back here real quick. FICO, a lot of times is more of, it has a longer history. And so we'll kind of talk a little bit about who's using FICO versus VantageScore. VantageScore is a little bit of a younger report, and so sometimes that is pulled because it's going to, if you don't have depth within your credit history, VantageScore is something that creditors will lean into. All right, let's talk about your score mix. So what goes into a credit score? So 35% of your credit score is your payment history. So clearly you need to pay on time, you need to pay the appropriate amounts in order to impact the majority of that credit score. Now, your use is also outlined here, and that's going to be 30%. You get an average age of the credit accounts, so that is going to hit you at 15%. Your account types and your credit mix is going to be at 10%. And that new credit inquiries. So when you go for a mortgage or a car loan, and they do what's called a hard pull, which we'll get into in a minute, that is what's going to impact your credit score, but temporarily. Okay, let's do a deeper dive in here. Your payment history is doing just that. It's going to keep track of all of your payments, and it can stay on your report for 7 years. So things like student loans, when you default on a student loan and don't pay your student loans, that will stay with you for 7 years. And so payment history is extremely important because it will create a lot of challenges for you as you try to improve your credit score in the future, if you need to. So just some tactics, some practical tips and tricks to make sure you stay on track. We all have busy lives. How many times have you looked at your calendar and thought, oh, is today really the 17th? I can't believe how fast time is passing, right? And so put reminders on your phone, have automatic payments, and then just make sure that maybe if you can, maybe you're making payments a couple times a month versus just one time a month in order to protect you from those late payments.
We have a question here. What do you give to do remove error in reporting?
Yeah, so there's a couple of places that we will provide to you at the end of the session, and that you can go and work on your credit report and clean it up if you have something reported in error. So yeah, we'll absolutely make sure. Let's see here. Excuse me for looking at my other screen, but I just want to make sure I understand the question, I answer it correctly. There are free credit improvement organizations. One of the questions is about the charges. And when we get to that screen, we're going to show you some links, and those are free links for you to work on your credit. Thank you for those questions. All right, credit use. So this keeps track of the percentage of your available use. And this was something very compelling as I was preparing for today, that I just want to make sure I grab up in my notes here for you and kind of run through a few examples, because it's really interesting, and if we keep it top of mind. So 30%. So when we take a closer look at 30%, right? And so give me a second here. I have so many notes, and I would have them organized and highlighted for you. All right. So for instance, so let's say you have a $10,000 credit limit, okay? And that means that you're carrying a balance. Let's say you carry a balance of $2,500. That's 25%. So you're looking at a $10,000 credit, and you have $2,500, that is 25%. So when you look at that 30% of credit use and how your score is calculated on your overall use, you can see that if you were at $3,500, you've exceeded the normal limit, what they're looking at for that 30%. So when you take a look at your limits and you take a look at your utilization, that's extremely important to understand how you're looked at as a credit risk. All right, how to keep your credit utilization low? Obvious, right? Keep it below 30%. We just kind of talked about understanding your balances versus your overall credit and keeping it under there, paying off those balances maybe more than once a month. We already mentioned that. And then request a higher credit limit to avoid that. And then also request a higher credit limit, but also avoid closing those credit cards. A lot of people think if they're closing those credit cards, that's going to be a good thing for their credit, but it does impact your credit history, and it also impacts that 30% ratio we just talked about. All right, length of credit history. So we just touched a little bit on your credit history and how important it is. You want to make sure that older accounts still stay true, so you have them still within your financial landscape. And even if it's just having a small reoccurring charge, hit that and you pay that off every month, it speaks to your credit history, which is an important factor in your credit score. So putting cards on autopilot, this is something that is really important to do, using your auto pay features, using your calendar reminders like we talked about before. That's all going to speak to these components of your credit score. So your credit mix. So when you look at your credit mix, you want to make sure that you have a nice mix of credit. So I have some sample profiles here. Lisa, what does a credit mix mean? Well, if you're a young professional, a good credit mix could be one student loan, which is an installment, and then one credit card, which is that revolving. So if you're mid-career as an adult, you have your mortgage, which is an installment. You have an auto loan, which is an installment, and then 2 to 3 credit cards, which are revolving. And that's when we say pay it responsibly, right? And then an established borrower, you're going to have that mortgage. You probably will have some type of an equity line of credit. and then an auto loan, and then several credit cards. And you can see how that mix is stacked. So hopefully that gave you some examples of profiles in different stages of life and what makes up a good credit mix. All right, we just hit on these mixes here when I gave you those profiles, obviously credit cards, student loans, auto loans, mortgages. This shows the lenders that you can handle it, that you're able and you're responsible as a credit, a nice low credit risk. So inquiries, here's that hard versus soft that we talked about a little bit earlier on today. And when you are, something to think about, like when you are taking a look for, let's say, a home, and they do a pre-qualification, that pre-qualification is a soft. So they're not actually going in and doing a hard pull, deep dive into your credit report. What they're doing is an initial look. And those initial looks are allowed. You will also, another example of a soft pull, let's say you get a pre-approval for a credit card in the mail. They have done a soft pull on your credit in order to be able to give you that, that offer, that pre-approval offer. So soft pulls are not going to impact your credit. Those hard pulls, when you do go to buy a car, get a mortgage, those are going to impact your credit. So one of the things that, for those that may have been shopping for homes and getting mortgages, one of the things to be careful about is to shop your mortgage. So you need to do enough pre-work and enough research to understand you're the right banking option for you and the right institution you want to work with before they do your hard pull. Please mute your line if you are unmuted. All right, so we've got our next poll coming up here. What's the biggest factor impacting your score? Tell us, is it your payment history? Do you believe it's your credit utilization, length of credit, your new credit, or your credit mix? All right. We've got some answers coming in. Keep them coming, keep them coming. All right. Just a few more, just a few more.
Excel Management, this is Londra. How may I help you?
Hi, my name is Christopher.
All right, so what we have here, we have 43%. It's the length of credit history is the biggest challenge. Coming in second, we have that credit mix at 29%. So you, in focusing on those two things, there's a couple of things that you can do to start establishing length of credit. We'll talk about that. We just hit on credit mix and what credit mix is. So you can, with intention, start building out your mix. Credit scores. FICO scores. All right. So one of the things I wanted to pull up, because this does get a little bit confusing. So FICO scores, this score is used at the majority of the lending institutions. So this is going to be the primary score. The other score that we mentioned we'll hit on here in a few minutes as well. But FICO score, something to know about FICO scores. So there are the three major credit bureaus will be pulling the FICO score, but FICO score has multiple models. And so those models are were created for different variations and different industries to pull the score. You don't really need to worry about any of this. This is just how it literally works. There's different credit bureaus using different combinations. And you don't need to know the exact meaning, but you just need to know it exists, right? You just need to know there's a variation out there. So that way, if somebody's saying, referencing your FICO score, then you know exactly what's going on here. This right here really kind of talks about a little bit of the sophistication. For instance, some lenders use those old versions of FICO score, and then the new multiple versions came out over the years, and there's a FICO 8, a FICO 9, a FICO 10. And so you can see how all of these vary. FICO auto score used by car lenders. You've got the bank card score, and that's used by credit cards. And then you have the mortgage score, and then that's used for home lending. So just be aware. This is more awareness. You don't have to study this. You don't have to be a subject matter expert at all. You just have to know it exists. So VantageScore is the other one. This was a little bit of a newer alternative to FICO, and it's for primarily new creditors. So this is something where you can have as little as 1 month of credit. And the range is very similar, and the scale is weighted very similar as the FICO score. I did want to go back in my notes real quick and just make sure that I talk about that score range. So just real quick here. Andrea, do we have another question that I accidentally ignored? Oh, no, we just have some comments. Okay, I just wanted to make sure I was taking care of you guys. So an exceptional credit score is 800 to 850. You have a very good score if you're 740 to 799. You have a good score if you're 670 to 739. And that is an average borrower in that range. If you're 580 to 669, you're fair. You might have some higher rates. You might have some additional fees or higher deposits in that range. 300 to 579 is poor. This is a very high risk. It's really hard to get approved. And a lot of times if you're getting approved, you're in those double-digit interest percentages and you have some pretty significant deposits. So this is a really challenging place to be in. And before securing a loan within that range, there's some things that you probably should think about on your credit report before going that route, because it will impact you significantly on the financial side.
We have a question. It says, does it matter if you have opened too many cards?
The primary concern that you want to really look at is that credit amount versus the credit used. So staying in that 30%. So if you have all of your credit cards, you have a balance of that example that I showed you told you about at the 10,000. Let's say all your cards come together at 10,000 and your balance is 3,500 or more. That's when you get into that risky category. That's when it starts to impact your credit score. So it's not necessarily the number of credit cards you have. It is really about that credit limit that you have and then the balances that you're carrying in that ratio. So that's something to focus on. If you have multiple credit cards and let's say one is an older one, that's helping you. That's not harming you because it's giving you that credit history that you need. All right. All right. So payment history and credit utilization are still the most important factors when somebody is looking at a VantageScore over a FICO. The age of the credit diversity, all of those are important factors. So that exists, like I said, usually for new creditors or new people establishing credit. But FICO is going to be your tried and true use that most creditors are leaning into. So benefits of good. I think we all might know benefits of good. You get better living situations, cheaper homes, your utility rates are even lower. So what some may not know is that when you have utilities, you might have markup fees because you're a higher risk. You might have deposits, some nicer amenities. When you have better credit and you're in a credit card relationship, then what could happen is you can get perks, right? How many people have had travel bonuses or, cash back, or you've qualified for these suites at hotels and all of those types of amenities because you have good credit and you're maintaining that good credit over time. More advantages. Nicer cars, affordable cell phones, everything is looking at this, right? Credit card perks we just covered. You could have no or fewer deposits in situations. You're less stressed. You're better from a job prospect because a number of employers, depending on your work, will do a soft pull, maybe even a hard pull as a part of your interview process. Obviously, more financial security and better insurance rates, because insurance can be looking at your risk. Why is that important to them? There's statistical value around low credit scores and higher insurance claims. So that's something that is even possible when you have good credit scores. All right, credit myths debunked. True or false? Our next poll, closing old credit cards always improves your score. A for true, B for false. Got a couple people answering so far. Keep it coming, keep it coming. You were listening, yay! That is so awesome, I love it. So yes, that is absolutely false. I mentioned that a couple of times today, and that is something that is absolutely a myth. And so people also think that checking their credit score hurts. We covered that as well. That certainly does not hurt. You need to be informed and mindful. We had a question come in about something that was reported on your report that was not a just item. And so that happens all the time. And then you don't have to worry about, I only need to worry about paying my bills on time. Well, if you do that, you could see a large chunk of your credit score is definitely going to be impacted, but there is more to it than just that, as we discussed. Carrying a balance helps boost my credit score. No, I think that might be wishful thinking, right? So paying off balances each month is what will better your score. Carrying balances do not. It's very costly to you because of the interest applied, and it does have an impact on your credit score. We just talked about those old accounts, didn't we? And then opening a new retail card helps my score. Well, it will generate a hard inquiry. So that does affect your score. But if you're talking about needing a better credit mix, then you can absolutely open a card. Again, it's just being smart and understanding that mix of your credit. All right. This one, number 7, I want to hit on too. When you hit credit, but you're using your debit card, which is coming directly out of your bank account, there is absolutely no impact on your credit score, because that is your cash and you're pulling the cash from your account. That isn't a credit that somebody has provided to you to be able to borrow, use, and then pay back. We hit on this. Credit reports are always accurate. Absolutely not. When has technology ever been 100% great? Never. And this is not an exception. Some strategies to improve your credit score: pay credit card balances strategically. When you're taking a look at your overall balances, keep in mind your credit mix, keep in mind how much of an impact it is when you have balances versus your total limit. Ask for higher limits. So you were provided a credit limit at the time you took the account out, and let's say it's a long-term account and you've had good payment history. Ask for higher credit limits. Something we haven't talked about yet is become an authorized user. So this happens a lot for children and their parents. This happens a lot for spouses. And so what you can do is become an authorized user on a good credit individual, spouse or parent. And that will help you improve your credit score, because it's based on their good behavior. And then you basically kind of shirt tail or piggyback that good credit behavior. Paying your bills on time and dispute your credit report errors. Deal with accounts that have gone into collection agencies. Do not ignore the phone calls. When you pick up that phone call and you have a conversation, an open and honest conversation with that collector, that's exactly what they want. No one is immune to collections. At some point in our lives, we have gotten ourselves into a situation. And so to protect your credit score, make sure you're working with those creditors or those collection agencies. Use a secure credit card. So a secure credit card is issued typically with a bank where you're funding the amount. So you're providing $500 into an account. That credit card is secured on that $500. And then as you were using good behavior, if you will, and using it and paying it back, you are able to then build credit. So this is a wonderful tactic for somebody that maybe had a lot of credit card issues in the past and then closed those out and really needs to rebuild things because that credit history is no longer. And you don't have necessarily a good credit score. So this is a great tactic for that. And get credit for rent and utility payments through Experian Boost. So if you don't know what Experian Boost is, it is an app. And if you pay your rent, for example, online, then what you can do is you can get this app and record your rent payments through the app, and then you get credit. Now, if your landlord is already reporting to your credit report, then this app is not going to be necessary because it's already providing that service. But many privately owned apartment complexes do not report to credit. And so this app is a wonderful way of getting credits, so to speak, on your good payment history. All right, and then add to your credit mix. We talked about credit mix. We talked about a couple profiles there. So protecting your information. All right, so credit freeze. Many don't know what a credit freeze is, and this is like locking your financial front door. So think about it as just kind of protecting yourself, like you close your front door at night and you lock it. This is what it does for your credit. It's a tool. It's designed for you to help you and protect you from fraud and identity theft. It does not take the place of an identity theft program, but it does put a line of security in place for you to help you protect yourself. This also shields from financial loss. So let's say somebody gets your personal information and they're taking out loans and are submitting applications for credit cards or other loans. This will protect you against that. Danger of database breaches. Look at how many times we've gotten notifications in the mail of a corporation or someone that we've done business with that has our information and a data breach has happened. So this will freeze your credit and help you control those requests that come through your Social Security number and your credit. So it works where there is a PIN involved, and it prevents those hard inquiries. It helps you control your accounts. So if you are trying to apply for something yourself, because it works with that PIN number, you can release it, you can fully function the way you need to, and also at the same time prevent that risk. It's free. You must contact a credit bureau separately to do this. It could be over the phone. You probably do need to do it over the phone. Sometimes there's online through your profiles, you can do this. But mail, don't try mail. Snail mail never helps us. And if you're trying to freeze your credit, it's typically because there's a risk that you've been exposed to and you want to put that line of protection in place, and time is sensitive. So phone, online, it's free. Lock your financial front door. You're just going to need a few pieces of information. It's super easy. Just making sure you've got your tax documents, your date of birth, those types of things handy so you can make this happen. All right, the credit bureaus. We were asked about some information. How do you work to get something removed from your credit report? Is it free or is it cost? It's free. Here are the contact information for the credit bureaus. Now, I will tell you that if you're showing on 2 of the credit bureaus something and the third one you're not, you need to contact both of the ones that you're showing. You cannot assume that you contact one and the other 2 will follow. You have to contact each bureau that is showing that incorrect entry on your credit. All right. So what if you have bad credit? You want to check for errors on your report. We talked about that. Pull your report, stay on top of your report. It's free. You want to pay down those bad debts, and you want to avoid new hard inquiries. So it's the hard inquiries that you need to be mindful of here. There are credit repair companies. These companies can dispute mistakes for you. These companies can do assessments. They can hold your hand and walk you through the steps. What I like about these credit repair companies is they can help you prioritize. So sometimes it becomes overwhelming. Maybe you're working on one thing and you should be really working on another at first and foremost. And so the biggest risk, though, is you will find there are red flags, there are scammers, there's people out there in this industry, just like all of the other industries that are scamming. So just make sure you are using a reputable repair service. And here's 3 of them that we've provided for you. Take a picture of this screen. And these 3 we do know are credible sources that you can tap into.
We have an inquiry here. It says, can you go over freezing?
Can we go over freezing? We can absolutely go over freezing as far as go back to those slides for sure. How to freeze your credit. You're going to be, your credit and lifting is free. The quickest way you're going to freeze your credit is through online profile. So you're going to go to the credit bureau. So we just gave you those links to those credit bureaus. All right, so you're going to go to the credit bureau. The information you're going to need is listed here. Let me go back to this slide. That way you can take a picture. Got it? And then here's the information you need. Another picture. And then here's the contact information. All right. Thank you for the question. All right, a polling question. What is your biggest goal in the next 12 months? All right. Is it to increase your score? Are you going to buy a home or a car? Are you going to reduce your debt? Are you going to protect against fraud? Or are you ready with a good credit score to plan for your financial future? And I don't see the final question on the poll, Andrea.
So I have put it up.
Or the
There
financial, the final answer, sorry, an E.
The E plan. Oh,
Yeah. If you are an E and you can't find it on your poll, because on my side, I don't see it on the poll. If you are ready to plan for your financial future, let us know in the chat, please. We want to take care of you. All right, so reduced debt is the primary focus of the next 12 months. We do have a portion looking to buy a home or a car, and then increasing your score, it comes in 3rd place. Actually, it's tied with buying a home. All right, we got some protect against fraud as well. Very good, very good. So my hope is today you were able to see a pathway in each of those areas. So we are going to be posting on YouTube this video that you can reference back to. Whoever invited you, they will be following up with you after today's session, making sure you have all of the goodies and all of the information that we shared today and that you're taken care of. Credit isn't just about numbers, is it? It's about choices, it's about your freedom, and it's about your financial future building. So what is it we always say in these sessions? It's the best time to take control. Take control of your financial future. If you'd like to see how we can help your individual situation, schedule time with the person that invited you. Let us sit down and have a free consultation. We're happy to do so. And if you want to learn how to do what we do and how we help our clients and how we help our clients' financial futures grow, just let us know. We're happy to share with you and invite you to learn more. So with that, again, I'm Lisa Lickert. Thank you so very much for checking in with us today and being with us for credit. And with that, I'm going to open up to any final questions.